Tuesday, New York time. The chart does that thing it only does when it wants to mess with your head. One candle snaps up, the next candle pretends it never happened, and for a split second, you can feel your nervous system reaching for the buy button like it's a life raft. And that's when you remember the worst truth about markets. They don't just move, they test you. Today is one of those days where the stock market can be asleep, people can be off work, and yet the metals tape is wide awake, because gold and silver don't care about your calendar. Now listen, before we go any deeper, my YouTube stats show most of you watching right now aren't subscribed. If you get value from this, hit subscribe and drop a quick comment. Type Our John AG so the algorithm knows you're really here. All right, I'm going to walk you through this open the way I wish someone had walked me through my first chaos morning. Not with predictions, not with fantasy, with a real-time play-by-play of what to watch, what to ignore, and the exact moments where most people get shaken out, right before the move they were waiting for. And there's one window, one tiny window, where the price action gets weird on purpose. When we hit it, you'll feel it. But first, I need you in the room with me. Mic check, 1, 2, 3. If you can hear me loud and clear, tell me in the comments where you're watching from and what you're sipping. Coffee, tea, water because you're trying to stay disciplined, or something stronger because you've been through this movie before. And while you're typing that, tap the like button once. Don't overthink it. It's the simplest way to tell the platform, send more people who care about this. Now, let me give you the part people usually hide. I didn't invent this watch the window mindset because I'm clever. I learned it because I got punished. Years ago, I had a morning where I was absolutely convinced I had the move. Everything looked perfect. Trend was up, momentum was clean, the setup was sitting there like a gift. So I sized bigger than I should have, because I didn't want to miss it. Then that little window hit. Volume surged, price dropped like a trapdoor opened, and my stop got taken out so fast I didn't even feel it until it was gone. And the worst part? 2 minutes later, price snapped right back, ran exactly the way I expected, and I watched it without me. I wasn't wrong. I was early, oversized, and emotional. That day didn't just cost money, it cost confidence. It made me question whether I even belonged in this game. So when I say today might test you, I'm not being dramatic. I'm saving you from repeating the same tuition. Okay, now we build. Because here's the headline for today, and I'm not going to dress it up. China's major futures exchange is closed for the Spring Festival window, and that matters more than most people realize. When a big liquidity pool goes quiet, price doesn't just continue normally. It either drifts or it snaps. And if you're not watching closely, it snaps right through your stop loss like you weren't even there. So let's set the table properly. If you're new, you need to understand what you're looking at when you see silver futures on your screen. One COMEX silver futures contract represents 5,000 troy ounces of silver. That's not a cute detail. That's the entire game. Because when the market moves $1 in silver, that's $5,000 per contract. And when you watch it move fast, it's not because retail is panicking. It's because big size can hit the book, and the book has to respond. Also, this matters for timing. Electronic trading for COMEX metals runs basically around the clock from Sunday evening through Friday afternoon, with a short daily break. So when someone says, the market opens at 8:30, what they often mean is, that's when the main US participation gets loud. And loud is where the games happen. Now, I'm John AG, and I'm coming at you from a spot where the air smells like salt and the world feels far away from the financial noise. Until you open a chart and realize the noise is global. If you're here live, welcome. If you're watching the replay, here's something you should know. By the time you're watching this, I've already posted a members-only update that condenses everything into one tight breakdown. What changed, what didn't, and what I'm watching next. If you want the in-depth version without distractions, join the membership and watch that members-only drop. Premium members get the deeper layer every time, and honestly, that also tells me who's really following. All right, now let's do what most people don't do. Let's slow down right before the market tries to speed you up. Because the first trick the market pulls is urgency. It whispers, if you don't act now, you'll miss it. And that whisper has blown up more accounts than bad analysis ever did. So here's what we're doing. We're scanning the open. We're watching the gaps. We're watching whether price is walking or lunging. And we're watching one specific window that I call the pressure minute. But I'm not going to throw it at you as a superstition. I'm going to show you why that time matters. The COMEX open outcry session for silver starts at 8:25 a.m. New York time. Even if you never trade the pit, even if you only watch a screen, that moment often lines up with volume spikes and sudden behavior changes. That's not magic, that's participation. That's when more players show up at once. And when more players show up at once, the tape can get emotional. So if you've ever felt like every day, right around that time, something happens, you're not crazy. You're just noticing structure. Now, before we get to that window, I want to do a quick roll call. because this channel isn't just charts, it's people. Drop your city, your country, your time zone. Let me know if you're watching from Karachi, London, Toronto, Dubai, Sydney, Lagos, New York, or a small town where nobody around you even understands why you care about metals. And if you're one of the quiet ones who never comments, this is the easiest comment you'll ever make. Now, before we push forward, I want to make one thing crystal clear. Nothing I'm saying is financial advice. This is a framework. This is a way to observe without getting pulled into the emotion. Because if you learn to observe, you'll start catching what most people miss. And what most people miss is the difference between movement and meaning. A candle can move without meaning anything. Meaning shows up in the reaction. So let's talk about what happened overnight. Because overnight is where the story starts, but it's where most people stop paying attention. They wake up, they check the chart, they see a move already happened, and then they chase. Chasing is what turns a good thesis into a bad trade. So here's what I saw. Silver ran up into an overnight high, then started moving sideways, then printed a gap that looked like someone punched a hole in the price. And then it started crawling back into that hole, like it wanted to pretend it never left. If you've watched enough metals tape, you know that feeling. It's like the chart is gaslighting you. And that's where people start telling themselves stories. It's manipulation. It's the end. It's moon time. None of those stories help you. What helps you is noticing the pattern. When a market is uncertain, it creates distance, gaps, spikes, sudden drops, because uncertainty widens spreads and widens emotions. And widened emotions create bad decisions. Here's the practical takeaway. If you see a gap, don't immediately treat it like a signal. Treat it like a question. A gap is the market asking, do you really believe what you believed 5 minutes ago? If you answer that question emotionally, you'll pay for it. If you answer it with process, you'll survive it. And survival is step one. Now, let's add another layer, curve structure. Sometimes you'll hear people talk about backwardation and contango like they're magic words. They're not. They're just describing the relationship between different months. If the near-term contract is priced higher than later contracts, that's backwardation. If later contracts are higher, that's contango. In a calm world, commodities often sit in contango because storage and financing exist. In a stressed world, the front can get tight. Now, I'm not saying 1 cent of backwardation proves anything. I'm saying it's a flare. It's the market quietly saying, pay attention to the front end. So if you ever see the front month acting more expensive than the future, ask yourself, is demand pulling forward or is liquidity getting weird? Either way, it's worth watching. Now, pause, because I can already feel some of you doing what I used to do. You're trying to turn every observation into a prediction. Stop. Predictions feel powerful. They're also how you get humbled. Instead, turn observations into if-then statements. If the support shelf holds, then I watch for a push into resistance. If the shelf breaks with follow-through, then I watch for the next demand zone. That's it. No ego, no hero trade, no drama. Now here's the question I want you to answer in the comments. Have you ever been in a trade where you were right, but the timing shook you out? I want real answers, because if you've been through it, someone else watching this needs to hear it. Now, let's address the China closed piece. When the Shanghai Futures Exchange goes into its Spring Festival holiday closure, there's a block of days where the exchange is closed. Then it reopens. This year's official window includes February 15th through February 23rd, reopening February 24th, which is effectively that about 9 days people keep talking about. That doesn't mean China stopped caring about metals. It means one venue isn't actively pricing while other venues keep printing. And when venues aren't synchronizing in real time, the world can look like it has a premium here, a discount there, and suddenly people start saying, look at the gap, look at the spread. The spread is information, and it's also a trap. Because if you don't understand what's causing it, you'll treat it like a prophecy. Here's the cleaner way to think about it. When one big venue is quiet, liquidity is thinner. Thinner liquidity means moves can be sharper. Sharper moves mean your emotions get louder. And louder emotions mean you either overtrade or you quit watching right before the signal gets clear. That's why we're here. We're not here to panic. We're here to read. Now, I'm going to do what I always do at this point. I'm going to scan the market like a pilot scans an instrument panel. Not because I think I can control the market, because I can control my decisions. Gold is doing its own dance, hovering near a big round number like it's testing whether the crowd believes in it. Silver is the more chaotic one, because silver has always been the wilder sibling. It moves faster, it fakes out harder, and when it runs so hard that the same people who mocked it at lower prices suddenly start speaking like prophets. That's not insight, that's crowd psychology, which means the real edge is staying calm when the crowd gets loud. Now, I'm going to slow the pacing on purpose because this is where retention gets earned. Most videos rush this part. Most videos scream. Most videos throw emojis and targets and drama. And then the viewer leaves because their brain gets overloaded. We're doing the opposite. We're building tension by building clarity, because clarity is what keeps you watching when the chart gets wild. So here's what I'm watching on the chart. First, structure. Is price making higher lows, or is it slicing support like it's not there? Second, reaction. When it dips, does it bounce quickly like someone is defending it, or does it sag like gravity is winning? Third, behavior around the pressure minute, because that's where the tape reveals its intention. Now, I'm going to say something that will make some of you uncomfortable. Most slams aren't mystical. They're mechanical. When you have a time window with more participation, you have a window where more stops sit, more orders cluster, more algorithms are awake, and more people are staring at the same levels. That's why sharp moves happen. And yes, sometimes the sharp move is designed to hit clustered orders. That's not a conspiracy. That's how markets harvest liquidity. So if you're new, here's your first survival rule. Don't put your stop where everyone else puts their stop. And don't let one 5-minute candle rewrite your entire conviction. Because today's theme is going to be this. The market is going to try to separate you from your position. And the only way it can do that is by using your own emotions against you. Now, as we approach the pressure minute, I want to show you a pattern that keeps showing up in metals. People love to label patterns like they're spells. They'll say, head and shoulders, and suddenly everyone thinks it must resolve. But patterns aren't guarantees. They're probabilities. So when you see something like an inverse head and shoulders developing, left dip, deeper dip, then a higher dip, you don't worship it. You ask one question. Is the market actually respecting the higher low? Because that's where the story lives. And the story, right now, is buyers are showing up earlier. If that continues, the next push can be violent. If it fails, the next drop can be humiliating. And that uncertainty is exactly why today is interesting. So here's comment question number 2. Do you think silver moves are more driven by paper flows or physical demand? Pick one and tell me why. I read the comments, and your reasoning helps everyone. Now let's talk about the level everyone stares at. Every market has a line in the sand. In silver, there's usually a zone, call it a support shelf, where prices bounce before, where buyers remember they got paid, and where sellers remember they got trapped. When the chart comes back to that shelf, it's not just a number, it's memory. And memory is where decisions get made. So if you've got a key support zone on your screen, I want you to do something simple. Draw it. Not mentally, physically draw it on your chart. Because when the candle starts doing gymnastics, that line is your anchor. Without an anchor, you become the exit liquidity. Now, we're getting close. I'm watching the clock. This is the moment where a lot of you start holding your breath without noticing. And that's the tell. Because the market can't make you click, but it can make you tense. And when you're tense, you make the worst kind of decisions, the ones that feel necessary. All right, here we go. Pressure minute incoming. I'm watching the bid. I'm watching the ask. I'm watching the size. And I'm watching whether the candle prints like a calm staircase or like a knife. If you've never noticed this, watch it today. A calm staircase is sustainable. A knife move is emotional. And emotional moves often snap back, unless they're being fed by something bigger. Now, if the candle dips hard right here, I want you to remember something. A dip is not the same as a break. A break is confirmed by follow-through. Most people confuse the two, and that's why they sell the dip and buy the bounce. They do it backwards, because they're reacting, not reading. So if you see a fast drop, ask, did it break structure, or did it just scare people? Now, we're in it. If you're feeling your heart rate rise, that's normal, but it's also a warning, because your body doesn't know the difference between a tiger and a red candle. It just knows threat. And threats make humans do one of two things, freeze or swing. Neither helps. So we breathe, we observe, and we wait for confirmation. Now, while we're watching this, I want to zoom out and talk about the bigger narrative, because a lot of you are here not just for the trade. You're here because you can feel something shifting. You can feel the paper world and the real world pulling apart. And whether you call it decoupling or a divorce or a disconnect, the sensation is the same. Spot price says one thing, real world pricing says another thing. And people start asking the dangerous question, what's real? Here's the honest answer. Both are real. They're just different games. Futures markets are liquidity games. Physical markets are inventory games. And when inventory gets tight, or when distribution gets messy, you can see premiums expand. That doesn't automatically mean the end is tomorrow, but it does mean the system is under strain. And strain always shows up first at the edges. So when you notice weirdness, gaps, backwardation by a hair, premiums moving, don't turn it into a religion. Turn it into information. Now let me show you how a premium messes with people. They see one price on a screen, then they go online or to a shop and they see something higher, and their brain jumps to, the screen is lying. Sometimes the screen is just showing a different product. A futures price is not a retail coin price. A minted coin has manufacturing, distribution, and demand components. But here's the part you should respect. When premiums rise quickly and stay elevated, it can signal that physical demand is absorbing supply faster than the pipeline can refill. That matters. Not because it means tomorrow is collapse, because it means the market is getting tighter, and tighter markets move faster. Now, let me talk to the people who are actually building something with this. If you're stacking and you're consistent, if you're budgeting and you're disciplined, I want you to do me a favor. Share one win in the comments. Not to flex, to help someone else. Maybe your win is, I stopped overbuying at peaks. Maybe your win is, I finally set a monthly budget. Maybe your win is, I convinced my family to learn what real money is. Whatever it is, drop it below. Because when people see real stories, it raises the standard for everyone. All right, back to the chart. If the market just tried to scare you and then snapped back, that's a message. If it kept bleeding slowly, that's another message. The tape is always talking. Most people just don't know the language. Now, let's address the calendar. Today is one of those US holidays where equity markets are closed, but the metals complex is still active. That creates a weird vibe. Less cross-asset noise. Fewer stock traders doing their usual hedging. And sometimes that means metals can move more cleanly, or more violently. Because fewer participants can mean thinner liquidity. Thinner liquidity means bigger candles. So if you're watching today and thinking, why does this feel different? That's one reason. Now, I also want to talk about the week ahead, because this is where people get blindsided. They think the only risk is the chart, but the chart is just a reflection. The real pressure comes from macro catalysts, policy headlines, liquidity events, auction schedules, central bank chatter, even geopolitical noise. And whether you believe the stories or not, markets trade the stories. So the only rational stance is preparedness. Know what could hit, know when it could hit, and don't let it surprise you, because surprise is expensive. Now, I'm not here to tell you what to think about any institution. I'm here to tell you how to protect yourself when the narrative shifts. The world can argue about motives all day. The market only cares about flows. So we watch flows. We watch liquidity. We watch risk sentiment. And we keep our exposure sized to our emotional infrastructure. Because if you can't sleep, you're oversized. That's not strategy. That's self-sabotage. Now, I'm going to insert a second cliffhanger right here because I know how attention works. In a moment, I'm going to show you the one mistake that makes people sell their stack at the exact wrong time. Not because they're dumb, because they're exhausted. But before we do that, a quick real talk. If this channel has helped you even a little, the cheapest way to support is subscribe. And if you want the deepest layer, the members-only video is already live. All right, back to it. Here's the mistake. People stack with the idea of protection, and then they treat it like a trade. They watch the price daily. They ride every mood swing. They feel rich on green days. They feel stupid on red days. And eventually they say, I can't take this anymore. So they sell. And they sell not because the thesis changed. They sell because their nervous system got tired. That's why I keep saying the real battle is emotional infrastructure. If you want to own hard assets, you have to stop asking them to entertain you. They're not Netflix. They're not dopamine. They're insurance. And insurance only feels valuable when it's needed. Now, quick practical moment, because a lot of you ask this. Do I stack 0.999 only? Here's how I think about it. Liquidity matters. Standard matters. But price matters too. If you get a screaming deal on non-standard silver and you know what you're buying, that can be fine. Just don't confuse a bargain with an investment thesis. The thesis is protection. The thesis is optionality. The thesis is stepping outside the system enough that you don't have to beg for permission. And that brings us to the topic that makes people nervous, digital money. If you've been paying attention, you've heard the conversations around central bank digital currencies, programmable money, trackable money, money that can be turned into a permission slip. Whether or not you think that future is guaranteed, it's rational to notice the direction of travel. More tracking, more friction, more rules. And if that direction continues, the value of private, offline, no counterparty assets goes up. Not because you're paranoid, because you're paying attention. Now, I'm going to pivot for a second to something more tactical, because this is where people can actually take action. If you've ever wanted to find metal at a discount, there are two worlds. The clean world, buying from dealers, and the messy world, finding it where other people don't look. Coin counting machines, coin roll hunting, estate sales, junk drawers. I'm not telling you that you'll get rich doing it. I'm telling you it trains your eye. It trains your patience. And it reminds you that real value can sit in plain sight while most people walk past it. That mindset alone is worth something. And it also gives you stories, because nothing makes you respect silver like finding it where someone else ignored it. Now, I want to drop a little bit of fun into the tension, because the market can feel heavy. So here's our ritual. When the candle starts acting possessed, I do a little lizard call. It's ridiculous. It's pointless. And somehow the market always reacts right when I do it. Not because the call moves the market, because the call reminds me to breathe. So if you're watching and you want to play along, drop A in the comments when you see the next big green candle. And if you're one of the people who thinks this is silly, good. Silliness keeps you from spiraling. Now, I promised you a personal moment, and I'm going to give it to you, because we don't hide the human part. A while back, my wife gave me a small sterling piece, something simple, something old school, the kind of object people used to carry when metal was normal. And she didn't buy it to flip it. She bought it because she knows what we're doing here. We're building a life raft. And every time I hold that little piece, it reminds me why this isn't just numbers on a screen. It's resilience. It's patience. It's a choice to own something real. Now, let's talk community, because this is the part nobody puts on their charts. Most people think the edge is the indicator. The real edge is the environment. If you're surrounded by people who panic, you will panic. If you're surrounded by people who learn, you will learn. So if you've been doing this alone, consider this your invitation to stop doing it alone. And if you're already doing well, if you're profitable, if you're disciplined, if you've got your process on lock, again, share one thing that helped you. It could be as small as, I stopped checking the chart every 30 seconds. Small wins stack. That's how real wealth is built. Now, let me tease something, because I promised you cliffhangers and I'm going to earn them. I'm working on a limited project that's tied to a milestone moment. Not a generic round, not a generic bar, something symbolic, something that only makes sense if you were here for the moment the market tried to break everyone and failed. It's a physical piece with a story, and it's going to be limited because it's made by hand. And here's the part that makes it even better. It isn't just silver. It's a reminder of a specific battle, a marker in time, a you had to be there artifact. I'm not taking pre-orders yet, and there's a reason. Because I refuse to do that thing where creators take money and then deliver 6 months later with excuses. That's not how I run this. Here's how it's going to work. We do a small first batch, we ship it immediately, and members get first access. Not because I'm gatekeeping, but because members are the ones keeping the lights on and proving they want the deeper layer. If that sounds like you, you'll know exactly what to do. Now, for everyone asking about giveaways, yes, we do them. Not as a gimmick, as a thank you. Because attention is valuable. And if you're giving me your attention, I want to give something back. So here's the rule. When a giveaway happens, winners post one simple thing in the comments of that video. Winner 2026. Nothing fancy, no sob story, just proof that real people got real metal. Because I'm not here to sell you fantasies. I'm here to build trust. All right, back to the tape. If you're still with me, you're already doing something 90% of people won't do. You're staying focused when the market tries to distract you. And that's why you'll be ready when the real move shows up. Because the real move almost never starts with fireworks. It starts with boredom, sideways, chop, fake out. And then, when everyone's exhausted, it rips. So if today feels boring right now, don't leave. Boring is where positions get built. Now, I need to address something else that happened today because it's part of the bigger theme. Digital systems are fragile. A social app goes down and suddenly people act like the world ended. A cloud service hiccups and entire workflows freeze. That's not a reason to panic. That's a reminder. Convenience comes with counterparty risk. If your entire financial life is a login, then your entire financial life is permission-based. That's not politics, that's architecture. And that's why physical ownership matters. Because a bar in your hand doesn't care about passwords. It doesn't care about outages. It doesn't care about policy updates. It just is. Now, before we close, let me bring you back to the beginning. Remember that moment I told you about, where I got stopped out and the market ran without me? That pain is optional now. Because if you learn to respect timing and size, you don't have to live in that frustration. You don't have to be right and still lose. You can be prepared. And preparation is the whole point. Now, let's land this plane the right way, because I promised you a full arc. Here's what we did today. We didn't chase the first candle. We didn't panic at the gap. We watched the structure. We respected the pressure minute. We zoomed out to the real-world forces. And we remembered the whole point. This is not about being right on a chart. It's about building a position in your life that can survive uncertainty. Now, 2 quick things before we close. First, if you made it this far, you're my people. So comment "Our John AG" if you haven't already. And tell me, what was the most useful part? Understanding the timing window, understanding contract size, or understanding the paper versus physical split. Second, members. Check the members-only video that's already up. It's the clean, in-depth update in one place, and I'll keep stacking those for premium members because that's where we can go deeper without noise. Now, last move. We're going to do what we do as a community. We're going to send support to a smaller creator who's live right now, someone grinding with a tiny audience the way all of us started. When you land in their chat, don't spam nonsense. Do it the right way. Drop a wave emoji, hit the like button over there, and leave one encouraging sentence. Because we don't just watch markets, we build people. All right, subscribe if you haven't, watch the members-only update if you're serious. And if you're successful, share one win so someone else gets stronger. I'll catch you in the next one.